it back in Miami just over a year ago about regulation coming and an opening up of global markets, pension plans, sovereign wealth funds coming into crypto, and obviously none of that has occurred. And that is actually why we're in a rut that we are right now. It also remains a huge opportunity. There is 2 points of light that I think people should think about that look interesting right now. There were a lot of bills coming forward, bipartisan bills in the House and the Senate about trying to regulate crypto. Now it's consolidated down to 2 initiatives. They're both bipartisan. One is very important. Since we last talked, there was a collapse in stablecoins. About 100 billion evaporated. The most, because it was decentralized, it wasn't much, it wasn't all in the United States. So the regulator, while being unhappy, it's not a domestic problem. It was based on bankrupt ideas, the idea that an algorithm could somehow stabilize a coin against the US dollar. That's proven to be false. We've had lots of pundits, Jamie Dimon lately calling it decentralized Ponzi schemes. He was speaking specifically to stablecoins, I believe, in that statement. However, at the same time, this bill called the Stablecoin Transparency Act is making its way, it's getting close to markup. And the reason it's interesting is it only does one thing. It only deals with stablecoins that are regulated and backed by the US dollar, nothing else. It's not trying to solve for NFTs, doesn't care about Bitcoin. It's basically going through legislation on a bipartisan basis as a payment system. And the reason you should be optimistic for this is, why both sides of the aisle support this is it basically overnight, should it get regulated, creates the very first global payment system backed by the US dollar, making the US dollar the default payment system globally. And it will be adopted by every country except North Korea, Russia, and China. And overnight, it will make America even a stronger nation in terms of settling for financial services. So it'll be the very first crypto policy that passes, probably sometime after November 8th. But everybody in here should be optimistic about that, because that signals the onslaught of more regulation that will deal with other digital commodities like Bitcoin and everything else. One of the great promises of Web3 and why we're all here today is that Web3 should signal the mass adoption of blockchain technology. And all of the dollars that are going into Web3 development are trying to do that, solving for the security of wallets, the ease of use of wallets, the transparency of the chain, making it adaptable and easy to use. And the killer app, I would agree with you, would be a downloadable app that would let me store my USDC or whichever stablecoin I choose to use as a payment system, and allow me to use that anywhere in the world, in the countries that have adopted it, with a fraction of the friction fees. Imagine a credit card is 350 basis points. ACH transfer fees, SWIFT system transfer fees, all those fees. Now, you wonder why Jamie Dimon is trying to talk this down. I mean, this is threatening his book in a big way. And so just payment systems alone are going to really cause some headaches in banks, because they love to transfer assets between themselves and charge you friction. Their gas fees are crazy high. And so this is the disruption and the potential. And I'd argue, you know, to this Voyager story and all of these guys that have gone bankrupt, let me all offer an alternative view. It's a good thing that that happened. And it scrapes the patina off the market. It eliminates the idiot management. They'll never get financed again. The ideas that were bankrupt in the first place will never come back. The market remembers losses of 60 billion. And so when you take out the weak managers, people that didn't understand leverage, the idiot managers, the ones that really were rogue in the sense that they were just doing it for nefarious reasons, you're cleaning the palette. And what's left with is opportunity of stable opportunities like Circle and others that are doing it the right way, and FTX and all these other companies that are raising capital the compliant way. So I'm optimistic that over the next 24 months, should we get some regulation, the spigot of institutional money will come pouring into this space. Part of that reason is many investors see this disruption coming in the next 2 years. So these banks are going to have to figure out how to adapt to this and compete with it. And the best way I'd say is, I believe that the sector will be the 12th sector of the S&P in 10 years. So what's going to happen is Financial services is a really big sector of the S&P. Some portion of that value is going to get transferred over to blockchain, the 12th sector, which doesn't exist yet. So you have to decide as an investor, there's two risks in investing in crypto. One risk is you invest in crypto. It's volatile and it goes to zero. Could happen. The other risk is you don't invest in crypto and all that asset value transfers over the next 2 to 3, 4, 5 years into blockchain, which is now providing some portion of financial services. You got risks both ways. I've chosen to invest in crypto and blockchain and many, many projects, including I'm a large shareholder of what Ben is doing here because I can invest in that company and it's regulated. I got no rogue anything. There's no Kim Kardashian SEC charge there. That's not going to happen. This is a regulated business in a market that's very advanced. The Canadian OSC, which is the equivalent of the SEC, gave this guy an order that he is now allowed to have 1 million Canadians trading on a broker-dealer crypto platform. And starting beginning of the next year, fractional shares of equities. So in one account, you can have everything you want. You can have equities, fractional shares, real-time quotes, crypto. I'm involved in so many different financial services companies and also that issue securities under the mandate of the SEC. So we know the regulator, we know the system, and we don't breach it for any one project. We can't do that. It affects all the rest of the businesses. So going to your question about technology, I think if you think about mass adoption, there's 3 things that have to happen in, let's say, the next 24 months. The wallet has to work. And basically, the wallets, whether you're decentralized or centralized, for lack of a better word, are shit. Like they're just shit. And they're not safe, they're hard to use, the average person doesn't know what they're doing. The passphrase technology, everybody gets screwed the first time. You always start with $250 and lose it immediately, you get it ripped off. It's always good to learn that, but that just isn't gonna work. So we're gonna have to, Web3 is about solving that problem. Number 2, we need security. You gotta have much better security as you amass assets, even if it's just stable coins. But if you're starting to build a portfolio in today's world and you're putting some portion of your savings to work, I don't care whether you use Schwab or Fidelity or Interactive Brokers, you're not worried about security. They've solved that problem. They've built that trust. They've done it over decades, and you're happy to hold your assets. We got to solve that in Web3. You got to feel that there is security to where your assets are being held. And lastly, and just as important the other 2, we need regulation. All these people that were founders of this fantastic nascent industry that think it can't be regulated, never should be regulated, I thank them for where they got us to today, but now I want them to get off the bus and let the rest of us take this forward, because there's no way we're going to get that $1 trillion of assets in here without regulation. And that's the part that makes it mass adoption. When your grandmother wants to own some USDC, then you know you've made it. I talk about this quite a bit. If you go and teach at MIT, as I do, graduating cohorts of engineers, I use this example all the time. And so you look at the cohorts that go into those colleges. Let's take MIT for an example. Pretty well need a perfect math score. They don't care what planet or country you come from. You have to be the best of the best of the best of the best of the best. Then you can be part of that cohort. And you bring your ideas and you are educated by a world-class institution. But it's when they graduate that you start to see what's going on, because the reason I go there selfishly is 1/3 of the class will always start new deals. You want to find out about these projects long before the VCs do. That's why I go there. I spend the time. And I've met many great, founders, etc. But here's what's changed in the last 3 years. You talk to them about where they're going to work, right? These guys have 50 job offers. I don't care what discipline of engineering you're talking about, electrical, computer science, mechanical, it doesn't matter. When you're graduating out of any college these days as an engineer, you got 50 job offers. Recession, no recession, doesn't matter. And you have them from all around the world. Where do they want to work? 1/3 of the class will never work in the 11 sectors of the S&P, ever. They want to work on the blockchain. Why? Because they see it the same way the internet was decades ago. It's a nascent opportunity and they can really make a difference. Now here's the answer to the question. It's impossible that you can pour that much intellectual capital into this industry and not expect extraordinary outcomes in a few years. These are the brightest minds on the planet Earth wanting to work in this space because they see the potential of it. Now, every politician gets that joke. It doesn't matter what side of the aisle you're on. What we're currently doing with these people, and MIT is a good example, is there's no screen or filter or curation on nationality there. If you're good enough, you get in. And then we educate you, and then we throw you out of America the minute you graduate. That's just fucking stupid. I mean, 100% stupid. And so we should be giving every one of those people the option of an American passport the second they get their diploma and they stay here, because they're the future of this industry and they're happy to work everywhere else. The Caribbean islands, the UAE, Brazil, Switzerland, everywhere else except America. That's very fucked up. The greatest technologies on earth were all developed in the United States. And this is the first time ever we're falling behind. I don't care what sector you look at, we have always dominated on tech, not here. And so that is a problem because it kind of came under the radar screen. Blockchains came screaming on. A lot of regulators didn't understand it. Now they're starting to see the use cases for it, and they're saying, shit, we don't have a piece of this. And I think it will resolve itself in the next 2 years. I think the midterms will probably be a turning point. Not to get into politics, but it's highly likely the House flips. I don't know about the Senate. Everything will get stalled in Washington except bipartisan bills, so there'll be no more of this jamming, spending bills through. They'll start to focus on things they both agree on, and one of them they agree on right now is stablecoins and digital commodities, as in Bitcoin. So that will be a good thing for this sector. But the mass adoption on something like this, just think about it. Right now, if you want to transfer, $350 to somebody, you bought something at a garage sale and they want $350 from you. Venmo, PayPal, Zelle. Have you ever looked at the fees on those things? And so I'm not criticizing the services, they work, but the minute you give an alternative, such as a stablecoin, which you can go onto the chain and just transfer to somebody for a fraction of that fee, well, I mean, people go to the path of least resistance. They always do. Providing stability for payment systems on the chain and regulation for it is going to be very, very disruptive because it's going to be so inexpensive. And it works internationally. So there's none of this, oh, I can't do it in Switzerland, or I can't pay for my meal in London or Paris. All that goes away. It just evaporates because the vendor at your Guide Michelin restaurant in Paris that you're having dinner at is saying, oh, you got a stable coin? Here's my wallet. Boom, pay your bill. And all of a sudden, that 3.5% that you were paying to whichever credit card you had, that is peeling off 150 basis points for themselves. I mean, I invest in all of these platforms because they make so much money. I mean, it's fantastic. But I'm also going to invest in Circle and other because I know those guys are going to disrupt the credit card companies. So I've made a ton of credit cards, but now, I mean, this is going to get crazy because there's going to be a hell of a competition. It's going to be really interesting because the minute I can use a stable coin on my phone, why am I going to use anything else? It's cheaper. I save money. That's the whole point. And all of a sudden, by word of mouth and by the fact that it's ubiquitous in every country that adopts it, everybody uses it, there you have mass adoption. And mass adoption starts to occur not at 100 or 1,000 or 100,000 users a day. It's 1 million a day. It's people saying, oh, this is the new standard. I'm taking it down. I'm going to download this app. I'm going to start using it. That's the potential of this. So you want to be invested in some of those projects because they're going to be that disruptive. And it's all about the thing when, people always say, oh, there's a great societal reason for it and it's burning less carbon and all that stuff. That's all great. But at the end of the day, what motivates people? Money. That's what they understand, and saving it. Everybody in every language, everywhere on earth cares about saving money. You have to solve a problem. That's a problem with a lot of these projects, a lot of these chains. There's no applications on them. There's no problems being solved. I mean, yeah, they're developing a new chain, but they'll die because there's no way to make any money. You got to have applications. So, obviously Ethereum is the top dog because it was there first, but it's too slow for financial services. So that's never going to happen. If you're going to do, the same number of transactions that any credit card company does, you're going to need a new chain. And it's not going to be Ethereum with Polygon on top of it. It's not solving for the gas fees. You got to solve for the speed and the security. And that means a miss then maybe if Solana stops blowing up or something where it can really prove to do hundreds of thousands of transactions a minute, if not millions. And nothing can do that yet.